Good morning, this is TOI Japan Market Radio for Tuesday, January 14, 2026. I'm coming to you from Tokyo with our daily briefing for global investors tracking Japanese markets. We've got quite a bit to unpack today across equities, the yen, and some macro themes that are shaping sentiment. Let me bring in our portfolio manager to walk us through where we stand.
Thanks. So looking at the headline numbers, Japanese equities had a strong session. The Nikkei 225 closed at 54,341.23, up 1.479%, while the TOPIX finished at 3824.0, gaining 1.298%. Notably, the Mothers Index underperformed, falling 2.589% to 2,182.0. Which suggests some risk-off sentiment in growth and smaller cap names. J-REITs were essentially flat, up just 0.218% to 2068.5. On the currency side, dollar-yen traded at 158.533, up 0.346%, so we're seeing continued yen weakness. Commodities were mixed. Gold in yen terms rose 1.24% to 17,560.0. And crude oil climbed 1.161% to 61.86.
That's a solid gain for the main indices, but the Mothers' decline stands out. Before we get into the details, let's talk about what drove the Nikkei higher today. We're seeing headlines pointing to a 3.1% surge in the Nikkei, with semiconductor equipment maker Lasertec leading the charge with an 8.89% jump. What's behind this rally?
Right. So the 3.1% figure you're referencing captures the intraday strength we saw, particularly in tech and capital equipment names. Lasertec's move is significant because the company is a key supplier to the semiconductor manufacturing ecosystem, especially in extreme ultraviolet lithography inspection. When you see a stock like that rally nearly 9%, it's typically signaling improved sentiment around the global semiconductor cycle. For Japan, that matters enormously because semis and capital equipment are core export sectors. It suggests investors are pricing in either better demand visibility or easing supply chain concerns.
So this isn't just a one-off company story, it's really a read-through on the broader tech and export complex. How should investors think about the implications for Japanese equities more broadly?
Exactly. If this momentum holds, we could see sustained inflows into cyclical exporters, not just semis, but also machinery, electronic components, and even materials. The Nikkei and TOPIX have meaningful exposure to these sectors, so a re-rating here would provide fundamental support beyond just technical or sentiment-driven moves. The risk, of course, is that this is a short-term bounce if global demand doesn't follow through. But for now, the signal is constructive for Japanese equities, especially the value and cyclical parts of the market.
Understood. Now, staying with the yen theme, we need to talk about what's happening with the currency. The yen has weakened to an 18-month low against the dollar, and traders are openly discussing the possibility of intervention. Can you walk us through what's driving this and why it matters?
Sure. So dollar-yen pushing through 158 and hitting 18-month lows is a big deal. We're now at levels that historically have made Japanese authorities uncomfortable. The drivers are fairly clear: persistent dollar strength globally, combined with the Bank of Japan's still accommodative policy stance relative to the Fed. Real interest rate differentials continue to favor the dollar, and that's keeping pressure on the yen. Now, why does this matter for Japan specifically? First, inflation. A weaker yen raises the cost of imported energy, food, and materials, which feeds into domestic prices. That complicates the BOJ's narrative and potentially forces their hand on future rate hikes.
And on the political side, currency moves like this don't go unnoticed. Are we realistically looking at intervention here, or is this still just talk?
It's more than talk at this point. When the yen breaks through key psychological and technical levels, and when officials start making public comments, even vague ones, you have to take the risk seriously. Intervention doesn't have to be imminent to matter. The mere expectation can create two-way volatility in dollar-yen. For markets, the implications are significant. Equities, particularly exporters, benefit in the near term from a weak yen. It boosts repatriated earnings and competitiveness. But if intervention does occur, you'd see a sharp snapback in the yen, which would pressure those same export-heavy names. On the rate side, this weak yen environment adds upward pressure to JGB yields. Inflation concerns and reduced BOJ tolerance for ultra-low rates mean the 10-year yield is likely to drift higher from here.
So it's a bit of a double-edged sword for equities, good for now, but risky if the authorities step in. Let's shift gears to something happening outside Japan but with clear implications for the region. China just reported a record trade surplus of $1.2 trillion for 2025, despite facing heavy tariff pressure from the previous U.S. administration. How should Japan-focused investors interpret that?
This is a critical data point. China's ability to generate a record surplus despite tariffs tells you two things. First, Chinese exporters have been extremely resilient, and second, global trade dynamics are under pressure. For Japan, this matters on multiple fronts. Japanese exporters compete directly with China in sectors like electronics, machinery, and industrial goods. If China is maintaining export momentum, that means Japanese firms are facing intensified competition in third markets, which can compress margins and weigh on pricing power. Additionally, a surplus of that magnitude raises the risk of further protectionist measures globally, which would create spillover risks for Japan's export-dependent economy.
So it's not just about China, it's about what this means for the broader trade environment and Japan's position in it. How does this play out across Japanese asset classes?
For equities, I'd say modest negative pressure, particularly for exporters. Sectors like autos, semiconductors, and capital goods could see margin compression from competition and potential supply chain disruptions. Domestic-focused sectors would be relatively more resilient. On the currency side, escalating trade tensions and concerns about global growth typically support safe haven flows, which would mean yen strength. That's somewhat counterintuitive given the recent weakness, but if risk sentiment deteriorates meaningfully, the yen would likely catch a bid. For JGBs, you'd expect downward pressure on yields, flight to safety flows would support bonds, and the BOJ's accommodative stance remains in place. So in a risk-off scenario driven by trade concerns, Japanese government bonds would be a natural destination.
That's a helpful framework. So we've got a tug-of-war between near-term yen weakness and potential safe haven demand if the macro backdrop deteriorates. Bringing this all together, what are the key themes global investors should be watching as we move through this week?
I'd highlight three things. First, watch the yen closely. We're at levels where intervention risk is real, and that creates two-way volatility. If you're positioned in Japanese equities, especially exporters, you need to be mindful of currency risk. Second, the semiconductor and tech rally we saw today is worth monitoring. If it's the start of a broader re-rating in cyclicals, that's constructive for the Nikkei and TOPIX. But if it fizzles, it could signal that global demand concerns are still weighing on sentiment. Third, the macro backdrop, particularly trade dynamics and China's role, is increasingly relevant for Japan. Global investors need to think about Japan not in isolation, but in the context of regional competition and trade policy risks.
Great summary. And just to recap the key numbers from today's session, Nikkei 225 at 54,341.23, up 1.479%, TOPIX at 3824.0, up 1.298%, and dollar-yen at 158.533, up 0.346%. It was a constructive day for equities, but with meaningful crosscurrents on the currency and macro side. If you're tracking Japan's markets and want daily updates like this, consider subscribing to the channel. We'll be back tomorrow with another briefing. Thanks for listening.
Thanks, everyone.